What's up, you guys? My name is Daniel, and on this channel, we talk about stock market investing. And in today's episode, we're going to be going over why Shopify could be the next Amazon stock and why the stock is always so expensive. Every time there's a dip in Shopify, investors are always scratching their head to see whether they should be buying this profoundly expensive stock. With a PS ratio of 61.5, Shopify sits in its own category of overvalued, according to most investors. There's no other stock out there of similar size with such a high PS ratio. And if you guys know any stock like this, let me know down in the comments below, because I couldn't find one. To put this all into perspective, let's say Shopify didn't grow at all for the foreseeable future. And with a PS ratio of 1 and at its current stock price valuation, the stock would take 61 years before the company could earn its total market cap in gross revenue. Yep, that's gross revenue, not net income. And for those of you guys who don't know what gross revenue is, it's basically the revenue before any sort of cost of goods sold or operating expenses deducted from it. And if we took out these deductions from the gross revenue and look at their PE ratio, currently they actually don't have any PE ratio, meaning the business is not profitable at all. However, in the next year, analysts predict that this business will turn a profit, and the PE ratio for the stock will be anywhere from 1,300 to 1,700. And what this means for Shopify as a business and their stock price is that if the business doesn't grow at all and stays the exact same, it'll take 1,300 years for the company to pay back their investors before the investors can even think about earning a profit. So this means you have to pass Shopify stock down to your great grandkids before you can see a profit. So this was just a quick fun exercise to put Shopify's valuation into perspective right now. But the big question is, why are investors still pouring their hard-earned money into the stock that seems wildly overvalued? So my theory comes down to two main points. Number one, the growth. Number two, the TAM, or the total addressable market. Taking a look at the growth, we can see that the revenues are growing at 46.6% each quarter year over year. This is quite impressive, but not unheard of. Other companies like Twilio and Okta have similar revenue growth rates, with Twilio even at 56%, so growing faster than Shopify. But the next key item is their TAM. The global market size for e-commerce in 2019 was around $3.5 trillion, and in 2023 it's predicted to be around $6.5 trillion, so doubling within 4 years. And that's trillion dollars, not billion dollars. Within the United States alone, there are 30.7 million small and medium businesses, which is their target market mainly. And Shopify currently only has 1 million merchants on their platform today. So assuming if all their customers are in the United States, which they actually aren't, they currently have captured at most 4% of the US market. But we should take these stats with a grain of salt because there are some caveats here, such as Shopify can't actually earn $6.5 trillion a year from the e-commerce market. They can maybe capture 2% from all the payments. And also, not all the small and medium businesses can actually use Shopify's service. Businesses such as lawyers or mechanics might not find Shopify's platform very useful to them. But these stats give you a general idea of how large their total addressable market is, how small their market share is, and how much growth they can have ahead of them. And currently right now, with Shopify stock trading at a profoundly expensive price, there's a lot of growth already priced into the stock today. Even as far as 7 years down the road, which I've actually showed the calculations in one of my previous videos, which I'll link in the description down below. If you guys have ever owned Shopify stock or currently own Shopify stock, smash that thumbs up button and also leave me a comment down below as to what price you bought in at, sold at, or are looking to buy into Shopify at. The next thing that we should ask is, how is Shopify's business so successful, and are there any competitors out there? First off, there are competitors to Shopify out there, and these are companies like BigCommerce, WooCommerce, Magneto, Square, Lightspeed, and a few other ones out there. But there are two main things, actually 2.5, that really set them apart. The first one is how they developed their platform as a bare bones platform and released an app store right away. And this model has worked for another company out there that's a huge company right now, and I don't know if you guys can guess it, but this company is Apple. Apple has built out their ecosystem, and mainly their app store is what makes their phones wildly successful. By allowing other parties to develop apps and add in different capabilities, it really makes the platform a lot more attractive for the end user. To this date, Shopify has around 4,200 different apps on their App Store, whereas one of the biggest competitors, which is BigCommerce, has only 801 apps. And actually, for those of you who are interested in investing in the e-commerce space, BigCommerce is actually filing for their IPO this year. And with their platform increasing with capabilities through third-party developers, Shopify can run a lean business by selling their bare platform and giving their merchants access to their app store, which has thousands of different apps that will help them build up their store. And what this all results in is more sales growth for the merchants, as well as more revenue for Shopify. And we can see that this has really worked out well for Shopify if we look at the revenue growth year over year. And this chart shows that they used to have a revenue growth of around 99%, but that has slowly dropped down as their company got a lot larger. And just know this, as companies get larger, it's harder for them to grow their revenue. So right now at Shopify's valuation, it's actually pretty impressive that they're still growing at a 50% clip year over year. The second thing that sets apart Shopify as a business is the way they tackle their problems. Shopify has always tackled their problems, which are the lowest hanging fruit and the biggest problems for their merchants. The first thing that they tackled for their merchants is allowing them to build an e-commerce website. And this included things like payments, how to set up a site, the domain, hosting, and a few other things that are the bare minimums of an e-commerce site. And traditionally, for a business to do this, they would need to hire a team of like 5 developers and pay them salaries of around $60 to $100K per year. With Shopify, they're only paying anywhere from $29 to $200 per month. The next thing that they focused on was allowing their customers to build a beautiful store through their UI and the UX. After that, they moved on to solve different issues like financing, which they opened up Shopify Capital, which will support small businesses and offer them small loans. Next, they looked at their app store to see which apps caught on, and either they bought them out or created their own. So they bought out Oberlo, as well as they created their own email marketing service instead of using MailChimp. Moving on to some of the more recent problems that they solved, they're solving the problem of fulfillment for the merchants by opening warehousing for them, as well as they recently announced that they're providing bank accounts for their merchants. Because right now, to open up a bank account, merchants are paying fees, and Shopify is allowing merchants to open up bank accounts through the Shopify platform for free. So as a business, why wouldn't you do that if you're starting out? So we can see that Shopify is actually solving a lot of the big problems for the merchants. Everything from setting up an e-commerce platform to even tackling the fulfillment process, which no other e-commerce platform is doing out there. This is what's allowing Shopify to attract more merchants to their platform versus other e-commerce platforms. And the half thing that I mentioned before is that Shopify is actually trending on social media without them doing anything at all. And the main social media platform that they're trending on is YouTube. And if you guys have been in the personal finance space and watching YouTube videos, I'm sure that you guys have come across a video about how to set up a Shopify store. I myself have come across hundreds of these videos, and I've watched a lot of them too. Heck, I've even set up my own Shopify store. And if you guys are curious what I am selling on my Shopify store, it's one of these things right here. They're called massage guns. And if you want to check that out, there's a link to that in the description down below. And I have a coupon code there for 20% off this massage gun. Just use the code TheFireGrind. Note, this is a shameless plug. And with all this social media attention, they're basically getting free advertising just like another company that I know of, Tesla. Now we move on to the part of the video where I talk about whether Shopify is a buy right now, as it currently has dropped 11% from its all-time highs. First off, I just want to say that I love Shopify as a business and I'm willing to buy it at the right prices. And even though it is quite expensive and never really goes on sale, there are a few points that I've seen in the charts where these are called buy points. And if we look at the 50-day, 100-day, and 200-day moving averages, this is where we can find a good entry point to enter into Shopify. So I think if the stock price touches the 50-day moving average, this might be a good point to consider opening a position in Shopify. However, this isn't the part where I would actually load the boat. It's if I'm trying to build up like a 5-figure or 6-figure position in Shopify, this is where I start dipping my toes into it. However, I think the time where you should load the boat in Shopify is when they drop to the 200-day moving average. So I'd probably load half the boat when it hits a 200-day moving average. If it drops a little bit below that, maybe by 5 to 10%, that's when you put in your other half. And history seems to show that Shopify always recovers from its 200-day moving average and will continue moving up. And I think as an investor looking into this business, if they continue on this growth and see this kind of traction in the market, If it hits the 200-day moving average, this is when I'll be buying in heavily into the company. So that concludes it for this video. If you guys have any questions or comments about Shopify stock, leave them down below. And as always, smash the like button and the subscribe button and the notification bell for future videos. Keep up the grind and have a great day.